On Thursday, the US stock market trading may receive lost optimism. At least the fresh statistics on inflation and employment in the US may serve as a ground for recovery and the growth of indexes. The data has already improved market sentiment in the US premarket trading. Analysts at InstaForex have analyzed the situation and are ready to present their fresh overview of the US trading session. On Wednesday, Wall Street's benchmark indexes suffered losses. Despite a relatively calm macroeconomic background, the tech sector dragged the indexes down. The Dow Jones Industrial Average slumped by 191 points or 0.54%. The Nasdaq index topped the list of the losers with a 1.2% drop, and the S&P500 index sagged and closed at 4,467 points. The benchmark indexes spent Thursday's pre-market session in the green. The release of a fresh CPI data boosted index futures by 0.8 and 1.1%, but within minutes the gain was pared back to 0.5 and 0.9%. As for the forecast for the S&P 500 index, it may spend the day in the range of 4,470 and 4,520 points. On Wednesday, the indexes closed lower as investors were cautious ahead of the CPI data, with the technology and financials adding to the pressure. The Nasdaq index led Wall Street lower on Wednesday, with the heavyweight Nvidia falling by 4.7%, followed by other stocks, the megacaps and AI-related companies that lost 0.4% and 2.3%. On a Tuesday, the losses followed a broad sell-off after rating agency Moody's downgraded several small and medium-sized banks. On a Wednesday, big banks extended those losses, with the Bank of America plunging by 0.8% and Wells Fargo losing 1.3%. 4 of the S&P 500's 11 trading sectors rose, with the energy stocks leading the gains, up 1.22% to a near 6-month high, tracking a jump in crude prices. On a Tuesday, China's deflation data also waned on market sentiment, as it fueled fears of a deeper downturn in the global economy. On a Thursday, Wall Street was strongly bullish. US stock index futures were up 0.3 and 0.6% in the European session, and the release of a fresh US inflation data only added to momentum. The main intrigue of the week has been revealed and speaks to the stability of the disinflationary process, which is certainly in favor of the risk takers. Monthly inflation in the United States in July 2023 was unchanged at 0.2%, matching market expectations. And notably, the housing cost index accounted for 90% of the increase. Prices for car insurance, education, and reaction also rose. On the other hand, airfares showed the largest decline. On a yearly basis, US inflation accelerated to 3.2% from 3% in June, but came in below forecast of 3.3%. The indicator has declined for 12 consecutive months. A year earlier, inflation began to decline from a peak of 9.1%. Meanwhile, core inflation, which excludes volatile food and energy prices, declined to 4.7% from 4.8% in June, below expectations of 4.8%. The indicators point to a fairly steady downtrend in inflation. At the same time, analysts were expecting similar data for July, but economists say August may bring surprises. The preliminary forecast is that the CPI may stagnate at 3% until the end of the year. Notably, new statistics may change the economic picture before the Fed's September meeting, but so far the financial markets believe in the Fed's pause by 86%. In addition, the U.S. Department of Labor's report showed that unemployment claims rose by 21,000 to 248,000 on Thursday. That exceeded economists' expectations of 230,000. Shares of mega-cap stocks such as Amazon, Microsoft, Apple, and others rose by 0.5% to 1.3% on the data. On the earnings side, Disney jumped by 1.5% after beating Wall Street forecast for quarterly earnings per share. US-listed Alibaba shares increased by 4.3% after the e-commerce conglomerate reported strong quarterly sales amid improving consumer sentiment. Meanwhile, on Wednesday, Joe Biden signed an executive order that bans some new U.S. investments in China in the sensitive technologies such as the computer chips and requires government notification for investments in other technology sectors. In addition, stocks may be under pressure from the new comments from Fed speakers, particularly Raphael Bostic later this afternoon. The US dollar looked gloomy amid optimism in the US stock market. The US dollar index was already losing against most currencies intraday and fell 202 points after the inflation data was released, but recovered later. At the time of preparing material for this video, the index is moving at 102.20, down 0.2%. As for the forecast, the index is likely to fluctuate between 101.70 and 102.30. On Thursday, the US dollar fell against most of its currency pairs after the release of inflation data from the United States. For example, after the release of the indexes, it lost 0.7% against the euro, but later almost recouped losses, reflecting robust position of the national economy and confidence in its soft landing. The risk of a recession in the United States is much lower than in Europe or the UK, despite the fact that the market is almost completely sure that the Fed will stop its rate hikes in September. Moreover, the euro is under pressure due to the rather steady increase in oil prices. Before the Fed meeting, the indicators may change, and the US currency has a margin of safety in the medium term and the status of the world's first safe haven currency. As for the Canadian dollar, the currency managed to recover thanks to the growth of the oil prices, and today's weakening of the US dollar provided additional support to the asset. The USD CAD pair traded intraday at 1.3385 or 0.25% lower. As for the forecast, the pair may trade within the range of 1.3360 and 1.3420. The weakening of the US currency helped the loonie to offset the negative effect of the moderate decline in oil prices. Brent fell by 0.15% to $87.42 per barrel, while WTI slumped by 0.5%. Both benchmarks have been rallying since June, with the WTI trading at its highest level this year and Brent at its highest level since January. Prices were also influenced by U.S. crude inventories, which rose by 5.9 million barrels last week, beating analysts' expectations by 0.6 million barrels. As for the cryptocurrency market, it traded flat on a Thursday. Positive macro data on the U.S. inflation was leveled by the market standoff with the SEC. Ahead of the U.S. bell, Bitcoin struggled to gain ground above $29,500, trading at $29,620. As for the altcoins, they traded mixed, with Ethereum, Solana, Ripple, Binance, and Litecoin oscillating between down 3.6% and up 2.7%. Ripple was the top loser today due to the news that the SEC had appealed to the July ruling in the case. XRP plunged by 5% but later minimized their losses, with the altcoin remaining higher by 33% for the months and 85% on a yearly basis, helped by the aforementioned decision, which has been largely positive for the coin. As for Bitcoin, it failed to get close to $30,000. The cryptocurrency does not leave attempts to break out of the trading range of $29,600 and $30,000. Settling above this level, BTC may return to $29,200 or increase to $30,500. Make profits with the InstaForex and keep track of market news on the InstaForex TV channel. So, see you online tomorrow.